Good morning. This is Dave Toth with an RJO MRT Technical Webcast update on the energy complex for Thursday, May 5th. We'd like to start off with the heating oil contract this time as a result of its dramatic overnight developments, that being the sharp, extensive, impulsive break below the 313.25 corrective low, or what we thought was a corrective low on April 19th, that provided our risk parameter that needed to be broken to expose a much larger degree peak and reversal threat. We have been relying on this area of former resistance, new support between 310 and 313 to hold this market, and within the context of the secular bull trend, approach the April sell-off attempt, the lateral, generally lateral sell-off attempt, as corrective within the broader bull trend. By virtue of overnight's sharp, impulsive continuation of this week's break and obliteration of that 310 to 313 area, we believe this market has now been is now vulnerable to a reversal of potential significance, with the 329.19 high from Monday as this market's perhaps single most important technical level. For that's the level the market now needs to recover above to confirm the past month's sell-off attempt as a three-wave and thus bull market corrective sequence. In lieu of such strength, further and possibly accelerated, even relentless losses straight away should be anticipated. For in addition to this clear proof of weakness and vulnerability, we also have to take into consideration the extraordinary heights of our bullish sentiment levels have achieved. Indeed, at a recent 83% level of in our MRT bullish sentiment index, representing 47,000 long positions to just 10,000 shorts, we've got to believe now that by virtue of this confirmed momentum break and break of the broader bull trend, this market has to be considered vulnerable to continued and perhaps accelerated, even relentless losses straight away. Looking at a short-term intraday chart, a 4-hourly chart, you can see the break below this former 313 area support that's now considered new resistance. And from a very short-term perspective, today's 317 high is the absolute minimum high and latest corrective high this market is minimally required to recover above to even defer this developing bear threat, let alone threaten it. In sum, and as a result of this break below 313, all bullish bets, regardless of scale, have been advised to be taken off, moving all traders to a neutral sideline position. And we advise approaching interim recovery attempts as corrective selling opportunities ahead of what might be continued, even massive losses in the weeks ahead. Moving to the RBOB contract, you can see this week's continuation of the short-term downtrend that has defined the 341.5 high from this week as at least an interim high. But as a result of the developments in the RBOB, in the heating oil and what we will talk about in the crude oil market, we don't want to underestimate the extent to which this market might now be vulnerable to further and even relentless losses straight away. From a longer-term perspective, looking at a daily log scale chart here, you can see the market eating away at this former resistance to support condition we discussed in our recent update between 327 and 329. That's the first indication that this market is peaking out. But given the scope of the secular bull trend, we continue to advise long-term traders to require a proof of weakness below the 316.17 corrective low from April 19th to confirm the bearish divergence in momentum of a scale sufficient to expose a much larger degree reversal lower. But given these developing bearish prospects, we'd also like to point out, looking at the weekly log scale chart here, the extreme high levels reached in both measures of market sentiment. Both the bullish consensus recently at 81%, the highest since June of 2008, and a 90% level, and this on our MRT bullish sentiment index of large spec bullish exposure reportable to the CFTC. Indeed, it has sustained levels in the 90s for months now. If and when the market breaks this 316.17 low, we'll have to also assume that this market is incredibly vulnerable to further and possibly massive losses in the weeks, months, and maybe even quarters ahead. These issues considered, longer-term traders remain advised to maintain bullish exposure, albeit at a paired, more conservative level, but a break below 316.17 is required to, in fact, break the secular bull trend. From a shorter-term perspective, shown on that 4-hourly chart here, cautious bearish exposure is advised, with strength above at least overnight's 333.5 and preferably the 341.5 high from Monday required to defer or threaten this new bearish view. And finally, looking at the crude oil market, you can see this week's developing impulsive attack on key support from the 105.98 to 106, the figure area in general, 105.98 being that April 13th corrective low basis the June contract. On a daily log scale active continuation chart basis, you can see the 105.31 low from that day is the level the market needs to break to confirm a bearish divergence in momentum of a scale sufficient to break the broader bull trend and expose a much larger degree correction or reversal lower. But given the extraordinary heights of our both measures of market sentiment shown on the weekly log scale chart here, recent 71% level in the bullish consensus is the highest since July of 08, and of course an extraordinarily high 95% level in the MRT bullish sentiment index. If and when the market breaks a key corrective low like 105.31, we absolutely have to respect the prospect of not only a larger degree correction lower, but a major reversal lower given the heights that have been achieved. We just can't underestimate the extent to which this market might then sell off. These issues considered, shorter-term traders have already been advised to move to a neutral sideline position. Longer-term traders are advised to neutralize all bullish exposure on the immediate break below 105.98, at which point we will then advise approaching interim recovery attempts as corrective selling opportunities ahead of an expected bear trend that could be massive in scope. Please stay tuned to updates on these and other markets on our RJOMRT.com website, and good luck with today's trading.